Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today's Tuesday. It's March 29th. It's 7:34 in the morning. The market's going to open up in a little less than an hour and a half. Actually, wait a minute. A little less than 2 hours. It's only 7:35. I'm doing this nice and early for you. Why? Why not? If you guys are getting benefit out of this, if I'm staying or trying to keep you guys out of trouble, or as a result of these videos, you're staying out of trouble, send me an email. I want to hear from you. support@marketgeeks.com. I haven't heard from you in a while. I want to hear how you're doing, how you're getting through all of this. It's not easy right now for anyone, but I want to hear from you. support@marketgeeks.com. Now let's talk about today's video. So NASDAQ 100 higher, Dow higher, S&P higher, and today we've got consumer confidence at 10 o'clock in less than 3 hours, in 2.5 hours. We've got the Red Book to give us a private idea of same-store sales. And tomorrow we've got the big report, the big one, the GDP, that will give the Fed a good indication of whether to continue their plan to raise rates or to back down just a bit. Then we've got jobless claim, personal incomes, and employment, and a little ISM manufacturing index to boost. The big report's obviously going to be the GDP and the consumer confidence. If consumer confidence is good, that's going to reflect on earnings. And remember, today, you've got two major earnings reports. You've got Micron and you've got Lululemon. If Lululemon is a good report, that's retail sales. That may reflect very positively on the consumer discretionary sector. More importantly, retail sales. If the report is bad, right, that may be a wake-up call for the Fed that they may have to slow things down, especially if the GDP doesn't meet expectations. So I think today's consumer confidence report is going to be very, very important for the market. Obviously, the market is being ruled by geopolitical events right now, but this consumer confidence report is very important, and I like the fact that the market's opening higher, and it turned yesterday. Now, the bond market continues going a little lower. It looks like it's staying in this range here. I'd like to see it go back up into the 140 area so I could sell the living hell out of it, excuse my French. But right now, we can't. We have to respect the trend. The trend is down. We have to wait for a pullback. The fact that the bond market is continuously moving lower is not positive for the market. So the fact that the stock market continues to stay this bullish with the bond market moving lower, because remember, lower bonds, higher interest rates, more pressure on stocks. So the fact that the bond market is still moving lower while there's a war is a very, very, and the stocks are moving higher is a very, very bullish sign. Now, volatility, look at this, folks. This is the first time in, I think, a month. Let's see here, 3 months. Wow. This is the first time since January, somewhere around here. Let me look at the chart, but this is really meaningful, okay? Very, very meaningful. I never would have thought I'd see this, but the last time the volatility level was at these levels, actually, no, we're below these levels here on February 9th, was in January. We're like below the entire levels of the war. Volatility is low again. We may get a spike if there's other attacks, but based on what I'm seeing right now, volatility has completely assimilated the war. I mean, look, we're below the threshold fear level. We're not even in fearful zone right now on the VIX, which is mind-numbing, right? I mean, we're in the middle of a war. If one bullet goes to NATO territory, we're in World War III. And this is because of what the Fed was doing during COVID. The liquidity is helping or stabilize the market to a point where none of this matters to a great degree. Put the call ratio, we went down pretty sharp overnight, and then we went right back into danger zone. We're near the threshold of 1 right now. So put the call ratio is telling us we got a little bit of relief, but we're still moving into defensive territory where there's a lot more puts outperforming the calls. Let's talk a little bit about global economy. Another round of peace talks between Russia and Ukraine got underway. Good luck with that. I'm not holding my breath. Crude oil prices reversed course with moderate gains after sinking 7%. I think we're going to see another rally. I don't think we're giving up the ghost yet on crude oil because this war doesn't have a definitive answer or anything. Markets remained unsettled, which is another reason why crude's not going anywhere. After investors try to gauge what's next for inflation, the global economy as repercussions of Russia's invasion of Ukraine continue to play out. And that's what I'm talking about. We have to think about what will happen after this war. The first face-to-face talks in 2 weeks between Russia and Ukraine began Tuesday in Turkey, raising meager hopes of progress on ending the war in bloody camp of attrition. I mean, this is just ridiculous. A two-phase lockdown in Shanghai, 26 million people is testing the limits of Chinese hardline zero COVID strategy, whose effects are being felt beyond the country's borders, and this is going to affect our supply chain. Remember, we feel COVID after China is done with them because it imports the supply chain. Oil prices are up about 40% globally over concerns about tighter supply, and I think they're going to remain elevated for quite some time. I'll talk about energies in a minute as we get into the technicals. Bond yields have been rising and still rising, even though the stock market is depressed a bit as Wall Street prepares for higher rates, but it's not keeping the market down. Consumer confidence report comes out today at 10 o'clock. Then we've got personal income on Thursday and Friday, the jobless claims. But for some reason, this news report forgot to mention the fact that tomorrow we have the biggest report of the quarter. That's why I don't trust the news. I trust myself a lot better. That's coming out tomorrow. And just to give you an expectation of what Wall Street is expecting here, they're looking at a 7.1%. If the number is, and it's pretty tight, if the number is below 7%, then the Fed can say, well, the numbers are slow. We may have to hold back raising rates, although I don't think they'll do that unless the number's really slow. If the number's really, really high, they're going to say, we got to take extra action. Next time we do anything with rates, we're going to go 0.50 basis points. Personal consumption annual rate, 3.1%. Again, keep your eye on these numbers. And if they're higher versus lower, it's going to impact the bond market because the Fed has major impact on bonds. If you see this number really hot, right, that means the bond market's getting a little too hot, and we may see a little to the downside. Too cool. And if the number is soft, oh boy, then the Fed is going to say, well, we may have to take some action. So again, keep your eye on this number. It's going to impact the bond market. And again, if the number is soft, it's telling us that the economy is slow. If the economy is slow, right, if the economy is not moving too fast, then the Fed will say we gotta cool off. We gotta raise the economy, and that will cause the bond market to go higher. If the number is really high, then the bond market will probably go lower because then the Fed will have a confirmation that economy is running too hot. So the hotter this number gets, the lower the bond market will go. The lower this number goes, the higher the bond market will go. And that's tomorrow. That's happening tomorrow before the market opens. Let's look at some levels now, shall we? Let's take a look here. By the way, 1 month, look at where consumer discretionary is right now. 5-day, look at where consumer discretionary is. Yesterday, and tech. Yesterday, look where consumer discretionary info is. That's one hell of a bullish market. This consumer discretionary is the most bullish sector, all right? So it'll be very interesting to see how this plays out in light of the GDP and in light of consumer confidence today, because consumer confidence reflects directly on consumer discretionary and tech for the most part, about 70%. All right, let's look at the stock market at levels. And I like what I'm seeing. Looking at the SPY here, we are now almost at my level. We're just a hair below. We're clearly above the 50-day moving average. If we break this level, we're going to go bulls. There's a lot of stops here. That level is the 459.06 level. We're at 450. We're going to open at 457.49. I want to see. So let's just say for argument's sake, let's just say the 459. If we can break the 459.20, the 459 level, there's a really good chance there's going to be a lot of shorts getting squeezed because this is not what people expected. There's been a lot of bears piling up, and they've been expecting a bear market. And guess what? We're above the 200-day moving average on the Dow Jones today, folks. That is officially a bull market right here. So if we can pass through the 357, I keep talking about the 35,700 level, but if we can pass above the 35,700 level, a lot of shorts are going to get squeezed. Matter of fact, a lot of shorts are going to get squeezed here. On the QQQ, we still have a while to go, which is the most interesting sector because that's the consumer discretionary one. That level is 369. 369 on the QQQ. We're going to open up at 365. On the IWM, That number is right here. We got to break. We just got to break above this level right here. That's the 210 level. Now, specific sectors, and I'm going to go back to what I've been saying now for a long time. We're literally at the 200-day moving average. We're at 189.34. I said this on this date right here. I said till we hit 190, what was that level? 190, 191, nothing good's going to happen. After we hit this level, we're going to see a lot of shorts getting squeezed because that was our last pivot before the war started. So if we can go over this level, that means the market is completely shrugging this war off, which would be amazing. Now, I still have a couple of shorts just for defensive. We have to keep our toes and fingers crossed, but this is very, 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 very positive. Let's see if we can break above the 190 level. Hopefully we can. A few more things we'll take a look at here is SMH. Also breaking above. That level here is 284, 285. If we can break the 285, you're going to see a lot of semiconductor activity getting squeezed. Now, today, I want to show you the top sector. Let's go to my filters. Let's see here. Nothing ever changes around these parts of town. Energy is the strongest sector. Communication services is the weakest sector. Let's go back a month. Energy, communication discretionary. Let's go back another month. Energy, communication discretionary. January 24th. Do you guys see why I like my CSI scan? It works. So energy and communication services. So for the energy sector, this is going to be an easy one. Oxy and MRO. Oxy, MRO, right there. You can do Apache too. Apache, MRO, Oxy. Those are the top three. Devon is good. Kanako. You can't go wrong with any of these. These are basic materials, Mosaic and CF. So Oxy, MRO, Apache, Halliburton, Devon. Right there. You got your top 4 or 5 stocks. Now, the bottom, PayPal. PayPal, and let's see here. IPG Photonics. Right there. These two right here. I would go with PayPal. That's the worst stock right now. So the best stocks are the energy stocks. The worst stocks are the communication stocks. But a lot of the communication stocks are also the payment processors. So those are the ones that I would be very, very, very cautious on right now. I'll be curious to see how Starbucks, Domino's, and all those other stocks do after the reports come out this week. Anyways, before I let you go, folks, volatility is nuts right now. A lot of traders out there are making a big mistake, and we believe it can kill their trading account over the next few months. But former $700 million hedge fund manager Jeff Zananeri, he's been working on a secret project that could be the cure for the current markets. And he's going live today at 1 p.m. Eastern Time to share a little-known breakthrough that targets some of the biggest overnight moves. So while markets are bouncing around day after day, smart traders have the chance to be on the right side of this jump. Jeff calls these overnight moves heaters. They're heating up. Folks, follow the link below. Do it now. Tomorrow, 1 long, 1 short, actionable trade ideas. I want you to follow this link and register to see Jeff's presentation, his class today at 1 p.m. Eastern Time. If you're watching on YouTube, go to the Wealth Press YouTube channel and follow the link below the descriptor. I'll see you guys tomorrow. Send me some love letters. Support@marketgeeks.com. Bye.